Hello traders, Gary Wagner here. Approximately 10:45 in Honolulu, 4:45 in New York City on Thursday, the 12th day of April 2012, and this is the daily report for gold and silver. Comments made by two members of the Federal Reserve banking system today suggesting that more quantitative easing was needed has prompted not only a rise in the stock market, but a very, very nice rise in the metals markets today. We have double-digit gains in gold, up about $16. As you can see, current print, roughly $16.75. Low 1651 and the high today is 1680. It's up almost 1%, 0.98%. Silver returning to its former glory, up about 2.5%. As you can see, a nice strong breakout in silver this morning, currently trading 32 and change, 32.35. As you can see, Kitco has it at 32.39 bid, 32.49 ask. Traders, the first market I do want to cover today is going to be the silver market. You know, silver's been really lackluster lately. We've had this position for some time, but we talked about the fact yesterday that in terms of where the market is itself, we needed to see a breakout and a close above 31.79. Reason being, as we look at this market, you can see over the last, call it week and a half, right in here, about a week, the market has been unable to close above this particular resistance area, 31.80. My thoughts yesterday was that if it couldn't take a stab to move to the upside, it would make a play to go back down. What we have seen today is a play to the upside. We've got a nice breakout. The market is sitting up about 2.5% on the day. It's outperforming gold by over 2 times because gold is trading up about 1% on the day. And what we want to do right now is to take a look at to see how it reacts. If it continues on this upward rise here, we want to see how it reacts near these tops. This is just above $33 per ounce. Traders, you can see what the comments by these two Federal Reserve members did to the dollar. This is a 432-minute Heikin Ashi, or Japanese average chart, and there can be no doubt that this type of comment is going to push the dollar down. You can see that right there. Let's get to the gold market. You know, we have been talking about the fact that what we have identified recently was a correction that in essence is called a triangle correction. Triangle correction, of course, is going to be composed of 5 waves and then a thrust. The question that we have been postulating is whether or not we are currently in the C wave or the E wave. In other words, are we at that final thrust or not? Now, when we look at this market, you can see this is a daily chart. We have had solid gains, except for yesterday, which was a quiet day. We have had solid gains. My expectations at this point is to see the gold market challenge this particular upper level of the triangle, this resistance line. My sentiment is that we have, in terms of market momentum, we have really shifted the momentum from the type of bearish activity we have seen back into a bullish arena. And interestingly enough, this is our weekly chart. Interestingly enough, when we look at a weekly chart right now of spot gold, we have a pattern developing simply called an engulfing bullish. Western technical traders call this an outside trading session. This is a weekly. They call it an outside trading day if it was a daily chart. But you can see the fact that it closed in the same area that it opened at this week and now is trading above the open of last week. Of course, a red candle means it opens, closes lower. Green opens and closes higher. What are our expectations? Well, when we take a look at this market, we hit the top of our market here, 1920. That, of course, is our record high. Straightforward Elliott wave calculations. This is going to be our A, our B. This would be our C. We are now in our D. We will get one final clip down, and that down will conclude the corrective period itself, because according to Elliott wave theory, what happens is after we get there, now we're close to the apex, you get what's called a thrust. What is a thrust? Well, simply put, a thrust is where you break out above the resistance area found within this triangle. So, my sentiment is, depending on the time scale and the slope or angle of this upper level resistance will determine where we really believe we have strong potential to see the gold market go before we see any kind of possible correction. Where would we get a correction? Well, if the count is truly here, we're going to get our first correction right in here. We'll look to cover somewhere around this area, and we'll look to re-enter the market once it hits towards the bottom of this trading range and, of course, gets really closer to the apex of this triangle. Traders, the last chart that I want to look at, 770-minute chart, straight candlestick format. It is the spot or cash market in gold. And what I am looking at are different areas on a technical basis where we can look for resistance. So as you can see, as this market came down, I'm simply pegging these series of tops resistance, and that's currently where we see the market at. So that's one spot, and you can see it also matches a support zone here. You can see some activity here. So there is some historical reference to that particular point. When the market came down in here, you had a little bit of resistance right here, and it also matches historically here. That's just below 1700. And then the last resistance area that we want to take a look at is right in here. We've got these series of tops. It's before that secondary top here. Of course, this is going to be ultimate resistance, and that's where I'm pegging this. Now, why is that important? Well, it's important for a couple of reasons. If this market does continue to move higher, we want to look at potential points where it might stall so that we get some indication of where this particular rally might conclude before we see it give back some of the gains. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Friday for the weekly review and wrap-up. Bye-bye.